So, welcome back to 2020 trading. My name is Kunle. I am a day trader of stocks. I get in and get out of stocks on the same day, hopefully for profit. So today is a red day recap. Today is my first red day on YouTube. It's my first red day in a long time. So this is a first. Today I had this stock here, Roku. This stock Roku was the main stock I had on watch. Why do I have this stock on watch? Roku is reporting earnings tonight, and we know everybody, well, not everybody, but most people expect Roku to have blowout earnings. Most people expect that they would have increased subscribers because of COVID-19 and everybody staying at home. So I had the stock on watch. I had all my money ready to go. I placed a trade at 132, around the 132 area, right? And I got to 130 shares, and I placed my stop loss right here at 132 and 132.50. I placed my stop loss, like to cover, to sell. And it went up there. It pulled back and pulled back and pulled back and stopped me out. Went down 4 more cents and it reversed and did exactly what I wanted it to do. Now that is, I don't know, bad luck, but it happens in trading. You're not always going to get what you want. It's not always going to happen the way you want it to happen. The mistake I made in this trade is I should have picked it up. I should have gone back in the trade somewhere here as the stock started to reverse, or here, right there, either here or there. That was the mistake I made. And again, what I try to do is every time I make a mistake, I try to make sure I identify the mistake so that next time I don't do it again. So I mean, it's okay. Now let me explain something. No trader wins every time. You always get, from time to time, you get these red days. What you have to do as a good trader is you have to make sure that the red days are small. You don't lose big. It has to be small. It has to be either similar to what you win on a regular day, or smaller. That is the goal of every single trader. You're going to get the red days, but you have to keep them small, and that's what I'm doing right here. Okay, so let me make a comparison. This is the graph, the chart of the monthly candle. Each of these candles represents a month, 1 month of Amazon, right? So Amazon, great company. Now the equity, the graph of a good trader is similar to the graph and the chart of a good company. So you get this greens, you get green days or green months, whatever, weeks, months, whatever. And then you get the red ones. So you get the red ones, you get a couple of reds, and then you get greens. But what the difference is, the greens are either more than the reds or they're bigger than the reds. You can see that the green candles are generally bigger than the red candles. That's exactly what the equity curve of a good trader is. So ultimately, because you're getting the bigger wins, or because you're winning more and you're losing less, or the frequency of the losses are small, ultimately what's going to happen is over time, over the weeks, months and years, your equity curve goes like that, just like Amazon. So that's what I'm doing here. So I'm not disappointed that I had a red day. It is what it is. I'm gonna come back tomorrow, and just do it all over again. And hopefully, if I do what I need to do and I follow my rules, I'll be back on track. It's going to be another green day, and probably be another green days for the next few weeks, hopefully. Okay, so that's how it is. So this is me in Roku. And I really had high hopes for this stock, and I expected it to just carry on and continue. I didn't think it was going to pull back the way it did, but it did make the pullback and stop me out. Okay, so this is the point where I got stopped out. I got stopped out at 132 and 50 cents. It went 5 cents or 5 cents down further at 132.45, and then it just reversed and went back up and did exactly what I wanted it to do, which is kind of sad because all I had, it was just literally 5 cents away, 5 flipping cents. So that's a little bit frustrating, but it's okay. I'm glad I've got my last or my first red day out of the way. My first red day recap. I'm glad I've got it out of the way. Of course, I'm going to be having them from time to time, but it's okay because it comes with the territory. It comes with the job. It's part of trading. You have to. Sometimes you're going to get a red day, and most of the times you're going to get green days. So that's how it is. That's the end of the recap for today. Tomorrow's Friday. Hopefully you can come here. It's earnings season, so there are always many plays. In fact, the problem is identifying the best setups and the ones with the best potential. That is the problem. There are many trades because it's earnings season. Earnings season is from for the first quarter. Is from earnings season for January to January to March is reported in middle of April to middle of May. So we're sort of in the middle of earnings season. So there's going to be many plays. We're back here to do it again. So before I go, I just wanted to show you what I should have done. This is literally the chart for Roku. So I got stopped out here. What I should have done is get back in here because look, right now Roku is trading at 130, is heading towards 139. That was my target. My target was actually 138. It's actually at 139 now. But I missed that. But I should have got back in here and look at that, a nice move. It's a nice 4 point right now is 4.3% move, and I was in there with 120 shares, 130 shares. That would have been a really nice day. So that's it for today. These red days and these red day recaps actually teach you more than the green days because they teach you a lot. But anyway, I hope that you learned something from today. If you did and you want to keep seeing these videos, like, comment and subscribe. If you have any questions, leave it in the comment below. I'll come back and answer it. Don't forget to subscribe to the channel and click on that notification button. All right guys, I'll see you tomorrow. Peace.